You're listening to another episode of the Young Investors Podcast, so sit back and relax as myself, Brandon, and my buddy Hamish discuss the latest in the world of finance and stock market investing. Now, a quick reminder before we get into the podcast is that nothing in this podcast should be taken on as personal financial advice. If you're ever unsure about your finances or investing and you need some help, make sure you reach out to a qualified financial advisor. But with all that said, let's get into another episode of the Young Investors Podcast. My challenge is to start this podcast by not saying welcome back, everybody.
Yeah, don't say welcome back. Don't ask me how the weather is in Melbourne.
I'll start it like this. Hello, everyone. This is the Young Investors Podcast, and it's just another episode.
Just another episode.
I'm
We're
trying
back.
desperately not to say, "Oh, welcome back, everybody." That's just such an easy way to do it. It's the stocks. I need to write down 5 different intro lines that I could just say.
Yeah, exactly. So we can change it up, keep it fresh.
Yeah, exactly. How you doing, Hamish?
I'm doing well. Very busy this week. I think we spoke about last week. I was looking for a place. I
Busy.
may or may not have a place. I don't want to.
May or may not. You haven't signed anything yet?
No, we have.
Oh,
so,
good.
yeah, so hopefully moving next week, if not the week after. So just been busy organizing all of that. But yeah, besides that, it's always exciting to do something a little bit different like that, to do a move and then to get to set things up in a new place.
Did you get the what you wanted in terms of, size? I know you were looking at getting a bit of a bigger place. Did it end up like that?
Yeah. So basically, I'm going to be turning the garage into a new studio, which should be exciting. So I've got a lot of space. It's a single car garage, so it's not huge, but it's pretty big. It's a garage. So,
where does your car go?
Just on there's more parking at the front.
Oh, right.
It's a
Okay,
house.
right.
It's got a garage, and then it's got places elsewhere to park on the property. But I'm excited. I'm going to set up my normal setup in one of the rooms just for now. So don't expect any massive changes to my set immediately. It's going to take me a while to figure out how to soundproof and design that set, but it's coming. It'll be in the works.
That's exciting.
Yeah, it'll be a fun project. I think it'll probably take me a while to get it to a point where I'm happy to then start recording in it. But I'm excited.
Yeah, nice. Oh, it's kind of like a stress off your shoulders because now you've found a place. But at the same time, it probably doesn't feel that way because now you've got all the work ahead of you. You got to get all your crap over to this new place and set everything up again. And man, are you going to make content this week and next week as you shift across, or are you just going to bite the bullet and come back next week?
Yeah, I'll do my best. I didn't make a video last week and I felt really guilty about it because I was just so busy going to just organizing a bunch of things for this. But I'll do my best. I posted a video this morning and I'll try and get one or two scheduled for next week, but it's going to be busy. So we'll have to see. And you know what? I think it's okay to take a break every now and then to do something. So
sometimes it can help. I don't know. Somehow it helps stimulate more views and stuff like that. I don't quite understand how that works, but anyway. All right, podcast time. Hey, so what are we talking about today? There just happened to be a lot of stuff to talk about in the space industry. So we'll probably talk a lot about space. Interesting. The stock market is kind of dipping down at the moment. Have you been seeing that?
Yeah, a little bit of turbulence in the markets.
Yeah, people are blaming inflation because we've got some interesting inflation numbers to talk about. And then, of course, our Lord and Savior Elon Musk appeared on SNL and just happened to crash Dogecoin while he was there. So lots to talk about today, and you've got a story about Apple, is it?
Yes. Yeah, Apple and Epic have been battling it out in the courts. I've got some updates in regards to that.
Ding, ding. All right. Well, let's get stuck into it, eh?
Yeah. So today's episode is sponsored by Sharesight, which is an application you can use to track the performance of your stock portfolio. And basically, you can enter in all of your trades. You can do it manually, or you can hook it up if your broker is one of the associated brokers, and it will just port over all of your trades automatically. And it will allow you to perfectly track all of the different types of gains that you experience as an investor so that you can get an accurate snapshot of how your portfolio is performing. So tracking things such as capital gains, dividends, dividends. If you have dividend reinvestment plans, regardless of what kind of drip it is, you can change the settings in there to allow for it, and it will do all of those calculations for you. Currency gains, if you're buying shares internationally or you hold foreign currencies. And then for me, the reason why I've been using it over the past 4 or so years is for when it comes to tax time. So Sharesight generates up to 10 different reports that can be used at tax time to work out things such as your capital gains, dividend income, and more. And you can just pass those reports over to your accountant if you have one. That'll save time and money, or you could do your accounts for yourself using their reporting. And at the moment, you can try Sharesight for free by heading over to sharesight.com/young investors. That's site spelled SIGHT, sharesight.com/young investors. So use that link and sign up to a free plan and use it for as long as you want. Or you can use that link to sign up to a paid plan to get more features. And if you use that link, you'll get 4 months off a yearly subscription. So go check it out. And also, again, thanks to everyone who has used that link to sign up. I hope you're enjoying Sharesight, and thanks for supporting the podcast.
Yeah, absolutely. Yep. I finally got Sharesight. I finally got myself set up properly with Sharesight the other day. I'd imported my stake portfolio, but I hadn't imported my Australian shares portfolio. Anyway, I finally got it all together. Yeah, far out. So I just squizzed through the tax forms because I was just interested, and just downloaded a few of those reports. Man, it's literally, I reckon that's definitely where Sharesight shines. It's just so easy. Like literally everything is there. And they track it really in depth. I was looking at some of the reports, and like they track it so in depth, they give you an estimate on future cash flow if you're a dividend investor. Like they predict the future dividends based on past dividends, etc. It's like far out. They really go over the top when it comes to their tracking. But anyway, that is Sharesight. It is very handy.
Yeah, the tax is so good because it does it reports it line by line how you would enter it into the tax when you're filing your tax returns. So you just go line by line, and it's so easy. You can do it by yourself. So it's
like A, B, C, D. Yeah. This number, this, and then on the tax return, it's like A, B, C, D. It's like, thank God.
Lifesaver.
No, it is handy. It is handy. All right, let's move into this first story.
Yeah.
The stock market's dipped down a little bit.
What's going on?
And it's on the back of some inflation numbers, so I'll read you this. Right. It says Dow tumbles 680 points in worst decline since January as hot inflation reading spooks investors. So what does it say? US stocks declined sharply on Wednesday as hotter than expected inflation data triggered massive selling, especially in technology shares. The Dow Jones Industrial Average fell 2%, its worst day since January. The blue chip benchmark tumbled as much as 713 points at its session low. Then the S&P 500's lost 2.1%, biggest drop since February. NASDAQ Composite dropped 2.7%, biggest weekly decline, bringing its weekly decline to more than 5%, if I can read that correctly. But the reasons for that seems to be people getting worried about inflation. It says inflation accelerated at its fastest pace since 2008 last month, with the consumer price index spiking 4.2% from a year ago compared to the Dow Jones estimate for a 3.6% increase. The monthly gain was 0.8% versus the expected 0.2%. Excluding volatile food and energy prices, the core CPI increased 3% from the same period in 2020 at 0.9% and 0.9% on a monthly basis. The respective estimates were 2.3%, 0.3%. So there you go.
That's big because
it is big, isn't it?
Of course, we were expecting that year over year, the consumer price index would spike a significant amount because we're now seeing comparisons to the deep part of COVID last year. However, on a month over month basis, when you're talking about going from say March to April, that 0.8% increase is substantial. That's not an increase from comparison to last year. This is comparison to last month. So inflation that is occurring in the year 2021 this year. So that is substantial, a big 4 times as high as what was expected. It's interesting.
Yeah, I think, and this, I've kind of been waking up and looking a little bit more at inflation recently just because of what Buffett was saying in that in his shareholder meeting. But it does seem like, I mean, that's the thing. It was only a few weeks ago, the chair of the Federal Reserve, Jerome Powell, was standing up and saying, very calming things like, look, it's fine, inflation, it's all good, it's going to be short term. We only see this as short term, we're not going to raise our interest rates until like 2023, they said, if they have to. But that's the thing, and all the investors kind of go, oh, thank goodness my interest rates are going to stay low, the stock prices are going to stay high, blah blah blah. But of course, then, like what we were talking about last week, Buffett's saying, look, we're a business running, and we're seeing that in home building, steel, lumber, all the prices of the raw goods are going up. We're raising our products, we're raising the prices of our end products, and we're seeing inflation. And then that's a problem because, like, the Federal Reserve, they can say whatever they want, but if there's big inflation, then their hand can be forced. If they need to lower inflation, then they have to raise interest rates, right?
Yeah, exactly.
So even if they say, oh, we're going to keep it low till 2023, what if inflation rose to like 10%? Then I think they would act like, no, we're going to keep doing what we said. We're going to keep interest rates low till 2023. It's like, nah, your hand's going to be forced and you're going to raise interest rates to control inflation. So... yeah, it's an interesting time. I to be honest, I don't pay too much attention to the macro, but I'm starting to pay more attention to this inflation thing because Buffett made such a point on it last week.
Yeah,
so.
It's one of those things that it's influenced by so many different things. We have no idea what's going to happen with it. So it's something we just watch over time because it is, as you said, it's going to impact businesses and it's going to impact tech-related businesses or growth-related businesses that are, for the most part, tech businesses in a much bigger way than other stocks as well. So that's something we've got to keep in mind. Businesses where a lot of the cash flows, a lot of the value in the business is coming far into the future. Those businesses are much more sensitive to changes in interest rates, and interest rates are kind of influenced by, the decisions for interest rates are influenced by inflation. So in a roundabout way, tech businesses will be much more influenced or sensitive to changes in inflation if it goes up or down. So we'll just have to see what's happening. But really, we're going to have to see towards the end of this year. That'll really be the tell, because right now we're seeing a lot of comparison from last year, and maybe it's higher than expected, but it's very difficult to project or to estimate what these things are. So it's not unusual for it to be different to the expected figure. But whether this continues later.
One point that Jerome Powell stated as well, that inflation, the figure that you get for inflation generally is it's like a what do you call it, trailing 12 month. So it's like it's trying to give you the most up-to-date measure of the annual inflation. But then if you like cast your mind back to whenever it was, like 12 months ago, that was when, I think it was around that time where Australia anyway was in deflation. So some of the numbers now are some of the jump up is because last 12 months ago, those numbers for inflation were very, very low. Because there was no supply for stuff because everything was kind of just shutting down. But there was also no demand for anything because, nobody was on the roads. You remember how there was like reports of, people can see the mountains in the city for the first time because there's just like no pollution because no one's on the road, no one's going to shops. So, demand just like dried up completely. So I think it does get skewed a little bit by the fact that it's that trailing 12-month basis. But yeah, I mean, it's still, I still kind of sit in the camp. Like, I don't know, firstly, nobody knows, but I still kind of sit in the camp of what Warren Buffett was talking about, where it looks like it could be getting a little bit steeper in the not too distant future. Well, it sounds like from his perspective, it already has gotten steeper. We're just waiting to see it in the consumer price index, I guess. Yeah.
I think a big driver as well will just be what happens with what countries do in terms of spending, because of course last year and even the start of this year, we expected that governments would continue to spend a large amount of money to continue to help people who are struggling and get people back into jobs. But
true. Actually,
will that become like a multi-year trend? Will it just become the normal for the US to say every 3 months or every 6 months to do another $4 trillion stimulus thing where they're basically providing, tax rebates or stimulus in some way to businesses and individuals? That could just become the normal that people expect. Like, where's my stimulus check? And if that becomes a normal thing where spending at this level is normal, then that obviously increases the chance of there being higher inflation. Whereas if they kind of ease out of it and really are planning on no longer doing stimulus, say next year, for example, and beyond, then that might have an impact. But we'll just see. So many factors and decisions that haven't even been made yet that will influence it. So it's not something that you can predict.
Yeah. Yeah, my brain starts exploding a little bit when I think about. I just kind of when I read about interest rates and economic thing, like I'm not a macro investor at all. I just kind of wish that I could just have Ray Dalio's brain.
Oh yeah,
I was like, can I please have your brain? He knows so much about this stuff. It'd be very helpful.
Yeah.
But yeah, anyway, that's our little spiel on inflation. Yeah, who knows? Who knows what's going to happen? But I don't know. Listen to Warren Buffett. Anyway, do you want to talk about Elon Musk, the Doge father?
Yeah, let's do it. What did he do?
Did you see his skits on SNL?
I did. I watched it.
Some of them were funny. Some of them are just cringe. I mean, he's a little bit of an awkward dude, isn't he?
Yeah, I don't watch a lot of SNL skits, but the people who do really well are obviously people who are very good at acting and reading a teleprompter and like memorizing lines and that sort of thing. I don't think that's Elon's forte, but it is still interesting to see him do it. It's funny just because he's doing it in a way. Not that he was like nailing every line that he had or anything like that.
Half the joke is seeing like Elon Musk in a Mario costume. That's like half of it. Anyway, but yeah, when was it? It was on the 8th. The 8th. It was his show that he hosted. So yeah, he did a bunch of skits on SNL, and all the Tesla fanboys went, "Oh my God, this is great!" And then he did this Dogecoin skit where essentially Elon gets brought on as the finance expert on the news segment. And then the host is like, but a lot of people are wondering, what actually is Dogecoin? And Elon Musk just kind of gives these just random facts about Dogecoin without actually explaining what it is. And that's kind of the joke, is that nobody that has Dogecoin actually understands what they actually hold or how crypto works or anything like that. Anyway, so that's the skit. And basically by doing that skit, Elon Musk basically admitted that, you know, Dogecoin is an absolute joke, and his personal interest in it is also a joke.
Wow, really? Surprise.
Yes, exactly. It's like, surprise, surprise, of course. I mean, he straight out said it in the skit, Dogecoin started as a joke. But it was kind of crazy because after the skit, the price of Dogecoin crashed by 30%.
Wow.
How insane is that? I find that hilarious.
It's it's really strange.
It's bonkers. It's the stupidest thing ever.
I mean, I thought I'd seen everything with the cryptocurrency space, but yeah, now it's really just who talks about certain cryptocurrencies. That's what's driving prices at the moment.
Pretty much.
Who tweets about it? What Wall Street Bets say? Like Wall Street Bets making it move for the first time, a few months ago now, where they tweeted Dogecoin hasn't been at $1 before. And then it went from like whatever it was, 0.000001, and it spiked massively, like 800% or something. Literally just because they made a post. And it's
that's crazy.
Really strange. Yeah, I'm looking at the market cap for Dogecoin. It's $55 billion. So
holy smokes.
About the size of a lot of, I don't know what businesses are at $50 billion at the moment in the US market.
Who knows?
It's a lot higher than a lot of businesses that are doing. It's
probably that deli we were talking about a few weeks back. That's probably got a market cap of 50 billion by now.
Oh yeah, probably. Let's have a look.
What was that called? I forget.
Hometown International.
Hometown International. That's right.
It's come off a little bit. It's 97 million in market cap now. So I think it's undervalued
like 105.
Yeah.
Undervalued. Yeah, we better get in.
Yeah, I think it's my price target is 2.4 billion.
What a scam. What a scam. Anyway, yeah. So yeah, pretty much, yeah, moral of the story is Dogecoin is pure speculation. Elon goes on, does this skit, crashes 30%, hasn't recovered. It's actually still down 34% since that skit. But I think what it does prove is that, unfortunately, there were like genuinely people that were thinking they were holding Dogecoin as an investment, because they've now obviously what Elon has said has been like, oh shit, this is actually a joke. And they've sold it because of that. It's like, that's the only explanation as to why it would have gone down, is that people were actually holding it as an investment and then realized that actually Elon Musk is just joking, and then have gone, oh crap, I need to sell. And that's driven the price down. So I don't know, but yeah, it's insane. It's insane. I think just, if you're going to buy Dogecoin, like, I don't care what you buy. It's your money. You do what you like with it. But if you're going to buy something like Dogecoin, you just got to realize that you are in the casino. You are at Las Vegas. You are not making an investment. You are just, you're betting on a sports game that you know absolutely nothing about. Yeah, that's how you got to think about it.
Yeah, you're like 8 beers deep at 4 a.m. at the roulette table. Like,
yeah, and you go, hey, Dogecoin, let's go.
Yeah, exactly. That's the level you're at. So as long as you know that, go for it. But
that's the takeaway for this story. Anyway, should we move on?
Yeah.
There's not too much to talk about. It was an interesting. I like the Elon Musk on SNL. I like the Mars Chad. Did you see that one?
No, I didn't see that. No.
Oh, that's hilarious. It's like, you know how Elon's always talking about how, I think you're a little bit crazy if you volunteer for the first mission to Mars, but some people are going to do it. Anyway, they've got the first settlers on Mars, and there's this one guy there called Chad, and he just doesn't care about anything. He's like, huh? Oh, yeah, cool dude. Anyway, they get him to go outside and save the colony. And then Elon Musk goes, well done, Chad. You've done a great thing for humanity today. He's like, face the camera. I want the whole world to see your face. And then all like Times Square billboards turn to Chad's face and all this different stuff. And then he's like, yeah, I want the whole world to see your face. And then Chad's going, oh, okay. And he starts pulling off his helmet.
Oh my God.
His head just explodes, and then the whole world gets to see his head explode. Anyway,
jeez.
You should, that one was actually kind of funny. You should go watch that one.
I'll have to watch that one afterwards.
Anyway, let's move on. What have you got to bring to the table
I've got a little
today?
bit of a story around Apple and Epic Games. Not really.
I'm interested in this.
Yeah, not really related to the actual ongoing court battle, but some stuff around it, I guess, or within it. But the long story short for what's happening with Apple and Epic, in case you are not familiar. First of all, Apple, for their in-app purchases for apps that are in their store, at the moment, they charge a 30% commission. And of course, if you're an app developer and you want to access iPhone users, you have to put apps in the App Store. There's no alternative App Store. It's not like it's not like Android phones where you can either buy in the Google Play Store or you can just download apps directly from the internet. You have no choice. You have to go through Apple's App Store. Right. So it's a bit of a gate that Apple has kept there in order to make a lot of money and to
pay the toll.
It's a toll. That's basically what it is. That's what I was looking for.
Yeah.
But basically, Epic created a bypass within the Fortnite app. So Fortnite's obviously a massive game that people play on a bunch of different platforms. They created a bypass within their app to avoid the 30% commission, which is not allowed. So in their app, they basically gave you an option to either pay the full price and Apple gets their 30% commission, or you pay a cheaper price, 30% less actually. So they didn't take any extra. And you can bypass Apple. And Apple, of course, is not too happy with that.
How did they manage that? I don't even know how they do that. It's like, to do this, please send a check to.
I don't know, because I guess
electronic funds transfer to this bank account.
Yeah, something sketchy like that. No, I mean, they must have just had an option for you to enter in your card details, I guess, directly into the app, rather than it doing that thing where you press a button and then it kind of redirects you to the Apple Store, or the little pop-up comes up. So they've obviously put some code in there that allows them to bypass it, but not allowed. Sneaky. Big no-no. So Apple immediately, Tim Apple said, no.
Tim Apple. Oh, I love it. I still can't get over that.
Yeah, it's never going to get old. So Tim Apple said, no. And they banned Fortnite from the App Store immediately. And then Epic, ouch, which knew this was going to happen, they did this all on purpose, basically. They turned around and they are now suing Apple, challenging those restrictions, saying it's not fair that those restrictions are in place. So that's kind of the backstory to...
Wait, are they suing them because they got kicked off, or are they suing them because they think the 30% toll is unfair?
Yeah, so basically they're challenging the rule in their terms and conditions that says that you have to
pay the toll.
Yes, you can't bypass the toll. That there is no way for iPhone users to play Fortnite and buy things in the Fortnite game without paying Apple a 30% commission.
Good luck to them.
Yeah,
but wow. Interesting case, because if they won that, holy smokes, that would just open the floodgates, wouldn't it?
Oh, it absolutely would. It's a big thing. And I mean, for some apps, like something like Netflix, for example, you can obviously download the Netflix app on an iPhone. And if you pay through the iPhone, then you're going to be charged that 30% commission. So you're paying actually more for the subscription. But of course, you could go and just go online and go on Netflix's website, buy the subscription, and then log in on your phone. Whereas for something like Fortnite, they're in-app purchases, so you can't really make them outside of the iPhone app. So there really is a gate that or a toll that Apple holds there. So yeah, it'll be an interesting outcome to kind of see what happens, whether Apple has to lift some of their restrictions. But this case is going to go on for a long time. It started in August of 2020, and these things go on for multiple years. We'll probably hear about it in the year 2030. Oh, do you remember that case back 10 years ago?
Yeah. Do you remember that?
Yeah.
Oh, yes. I think I was alive back then.
Yeah. Apple won.
Oh, I used to have an iPhone. Yes.
Yeah. Remember Epic Games? Yeah, they're bankrupt. Apple
Apple bought Fortnite. And then they had no other assets.
Yeah, pretty much. No, but
is there an update to this court case? Is there?
No, so there's no update to the court case. But interestingly enough, with these court cases, they have to make both businesses have to make a lot of disclosures in discovery, and there's obviously a lot of people who testify from different companies as witnesses. So you kind of learn some things that are interesting about the case specifically, about these businesses, but also about other things. So there was an article by Business Insider that kind of covered some of the biggest things that we kind of learned, and these are kind of just fun facts, I guess, that are not publicly available otherwise. So one of them is that so there was the VP for Xbox at Microsoft, Lori Wright, actually testified on Wednesday as a witness because Microsoft is backing Epic in this battle, basically. And as a result, we found some things out about the Xbox. The Xbox console, for the 2 decades that it has been out, has never been profitable for Microsoft.
Wow.
Which is an interesting thing. So they do make profit on Xbox overall once you include things such as the Game Pass and the digital game sales in their store within the console. But the console itself, they actually sell at a loss, which is an interesting
It's kind of
thing.
like the printer, isn't it? Don't printers, the manufacturers, sell them at a loss and then charge more for the ink?
Yeah, and then the ink is outrageously expensive.
That's the profitable part of the business? I think so. I can't remember.
Yeah, I mean, I'm sure that's the case with some printers at least. But yeah, I mean...
Right, so their strategy is to just take a hit on the hardware, make it up in the game sales.
Yeah, and I mean, it kind of makes sense. You're basically buying a decent PC when you're buying a console, yet the price is far below what you would pay for a similarly spec'd PC if you were just to build a PC.
Actually.
So I never thought of it like that, but to charge, I mean, I guess now they're like 500, 550, but previously they were 300 or 350.
True. Yeah. It seems like this is probably inflation for you, but the prices of all electronics have gone up quite a bit over the past, say, 3, 4, 5 years. Yeah. Because you're right. You used to only, like even phones back in the day. I remember there was a time where I'd tell my mum that I bought a phone for like $500 and she'd be like, what? $500 for a phone?
Yeah.
I was like, yeah, it's kind of like what they cost these days, mum. But now it's just like, oh yeah, mum, I bought a phone for like $2,000. Yeah. What the hell?
I'm on a payment plan for the next 6 years, and if I don't pay, I go to jail. An Apple worker comes
So
to my
true.
house every week, and I go to
whacks
Apple.
me in the head.
Yeah, I go to Apple once a week to do some labor.
I mow the lawns at Apple HQ to keep me out of jail because I can't pay my phone bill. Apple prison. The dark dungeons underneath that circular building.
Yeah, pretty much.
Anyway, so that's interesting. Okay, so Microsoft, wow, that does surprise me.
Yeah.
Not really profitable on their hardware.
Yeah, it's interesting because we learn about that, and Microsoft basically has nothing to do with this case, but they were asked a bunch of questions and they answered them. So it's interesting. You find out things like that. In terms of other things, so a bit more related to the case, Apple's App Store profit margin is 79.8%, or that's what it was in 2019 and 2018, which is huge, but it's really not surprising at all. There's no competition, as we spoke about earlier. iPhone users are probably not going to switch to Android if they can't get an app that they want. So iPhone users aren't going to move based on what apps are available, unless there was a really big app, but I can't imagine that happening. So they can get away with charging developers whatever they want.
I mean, you can definitely tell that, like, you can just see by the way it's structured that a business like this is going to be a high margin business.
Yeah.
But holy smokes, like an 80% profit margin. It's quite impressive.
I wonder if it would ever be possible for an app to leave the Apple Store, so you couldn't get it on iPhone, that would actually influence iPhone users to change phones. Do you think that exists? Like, let's say, for example, I don't think it would be one app. If it was a bunch of apps, but if, let's say, Facebook, Instagram, Snapchat, Twitter, imagine if all of these apps just pulled out of the App Store. Do you reckon that would change people's behavior, or do you reckon people would just still stay as iPhone users?
I probably think they'd stay. The only one, I'm just thinking about raw numbers here, and I'm just thinking about the only app with enough users would probably be Facebook or something in the Facebook family of apps. That would probably be the king that. Yeah, if I would imagine that if they withdrew from Apple devices, then a fair few people would switch because there's just such a networking effect there. Yeah. However, I mean, even still, it would probably hurt Facebook more than it would hurt Apple. There would be some people that would leave for Android so that they can use Messenger and Facebook and Instagram and that sort of stuff. However, still, I'm sure that would just assist maybe like Snapchat or something, just become a much bigger platform. It's like, oh, do you have an iPhone? Oh, we'll talk on, I mean, they've already got like iMessages and stuff and that sort of thing, but it's just like, oh, we'll just talk on Snapchat. We'll post on Snapchat instead. So
yeah. I don't know. Apple has such a powerful ecosystem. So it's,
I definitely think that the Apple ecosystem wins.
Yeah.
I think that if Facebook withdrew, some people would do that. Yeah. But I still think that Apple would win.
Yeah, it is an interesting idea to kind of think about what would happen or what would actually cause Apple to lose users. Because, without that happening, without the 1 in a million chance that all of these apps just decide to pull out just to screw it to Apple, they're in a position of power. So they definitely have a strong position there. But in terms of
almost like they've got a competitive advantage, Hamish.
Some kind of economic moat.
Yeah. What do you call those things again?
Protective layer. So in terms of some other things, Fortnite, we found out made $5 billion in revenue in 2020. It's a big,
that's big
amount of money, and the game itself is actually free. So this is all in-game purchases,
in-app purchases.
Which is
wow.
It's the way to go now. Even things like COD now. I mean, you still pay for COD, but they are pushing heavy on the in-app purchases, on the in-game purchases, skins and weapons and that sort of thing. So very, very interesting. In terms of specific consoles, Fortnite made $150 million a month from the PS4. And $23 million a month from iOS, from iPhone users. So a lot of money.
There you go. Yeah. Cash. Yeah. Wow. That does surprise me that it makes $5 billion in revenue. Because with a free app, like that's bonkers.
It's a big game. It's
Anyway, what's this last tidbit you got? This sounds interesting. The Epic CEO sends Tim Cook an email at 2 a.m.
Yeah, so we also found out that before Epic had made changes to their app to bypass the payment system, the CEO of Epic actually sent Tim Cook an email at 2 a.m. telling him that they were going to do this. So it was entirely coordinated to start a lawsuit against Apple, basically. And in the email he wrote, I'm writing to tell you that Epic will no longer adhere to Apple's payment processing restrictions. Today, Epic is launching Epic Direct Payments in the Fortnite iOS app, passing the savings of Epic Direct Payments to customers in the form of lower prices. So they basically indicated, we're not going to follow your rules anymore. And that kind of kicked it all off. But yeah, sending an email at 2 a.m. Can you imagine if he was just up at 2 a.m. and he sees that? Yeah. Oh boy. Helen, get George on the phone.
Boy, I like that. Oh my golly gosh. Oh darn it. Oh, that's funny. Wow, that is interesting how you kind of tease out all these interesting nuggets just from a court case.
Yeah, hopefully we'll get some more in the future. Yeah. We'll get some interesting facts about Apple. The truth will come out.
It's going to be an ongoing thing, I think.
Yeah,
ongoing thing.
Very long time.
Anyway, do you want to move on?
Yeah, let's do it.
Let's talk about SpaceX. You know, interestingly, you know how SpaceX, they are, it's not a big part of their business right now, but they want it to be in the future. It's going to be quite a large part of their business in the future. You know how they're sending up all those Starlink satellites?
Yeah.
They've sent up over 1,500 Starlink satellites to date. But what was interesting is that recently we got some news that that SpaceX has received more than 500,000 orders for the satellite internet service as it's rolling out. The company announced on Tuesday. They say, to date, over 500,000 people have placed an order or put down a deposit for Starlink, SpaceX operations engineer said during the launch webcast of its 26th Starlink mission.
Wow.
That blows my mind because, I mean, this thing is like barely operational right now. They need excuse me, they need so many more satellites.
Yeah, can you explain to me? No, all I was going to say is, can you explain to me a little bit? I know we've probably spoken about this a couple of times, but what exactly Starlink does and how that's...
So it's just internet. Yeah. It's just satellite internet.
Right.
Okay. So what you need to do is, if you're a customer, so the idea, first of all, for Starlink is that they achieve that kind of global satellite constellation coverage. So they just can provide satellite internet to the whole world.
Wow.
I don't know if you remember, I used to have this speculative investment called Sky and Space Global.
I do remember that, yeah.
Yeah, and it just went bust.
Right.
But they were pretty much trying to do what SpaceX are doing. They were trying to build this nano satellite constellation to provide, internet and services around the world. But they just couldn't cut it, and SpaceX is now doing it. So the idea anyway is it's mainly a system for regional places, regional internet, rural areas. Right. It's not designed for high density like cities. It just won't be able to cope. But the idea is that, if you live rurally and you've got no internet infrastructure, you can just hop on, buy a dish from Starlink. That's the other thing, is that you need a dish because it's satellite internet.
Right.
You stick that on your roof and then you can have actually good internet.
Right, okay. So it's kind of filling the gap of at the moment where if you live rurally, then you're probably not near any cell towers, and as a result your internet is probably poor. So it's kind of filling that gap at the moment rather than adding to the cities.
I mean, if you're in the center of New York City and you're trying to get good internet with Starlink, like, good luck.
Right.
But yeah, the criticism though so far is that it is, one day it's going to be great and the cost is going to be low. That's the idea, low cost internet that actually works for everyone on Earth. However, right now it's not the case. Like, they've got 500,000 orders, but it was in October last year that they began to run a public beta program for Starlink. But the service there was priced at $99 a month.
Whoa.
And that's in addition to having to buy a $500 Starlink kit, which includes the terminal, the dish, and the Wi-Fi router to connect to the satellites. So it's not cheap. Well, it's not cheap.
That's like
sorry,
I was just going to say it's like a full priced. That's like the maximum you could pay here in Australia, I think, it's expensive for internet service. You'd be getting pretty fast internet, at least for Australia, not relative to other parts of the world. But
but I think it's very interesting. And Elon Musk has come out and said many times in the past that Starlink actually holds the key to a better kind of a higher margin business, a more revenue generating business for SpaceX. Because at the moment, really, the way they make money is just by launching other businesses' satellites or, military satellites or something like that. So that, like, you think about industries that are not going to be very profitable, and you're like, probably put like space as one of them. Like just the costs are so high to build these rockets, and I mean they're launching these satellites, and the margins aren't high, so. A lot of times in the past, Elon Musk has said actually Starlink is going to be a big key to SpaceX's revenue in the future and enabling missions to Mars and that sort of thing. So I just thought it was interesting that they've now got 500,000 orders, but I don't know how to feel about that, because I feel like a lot of people have signed up without actually realizing what they're signed up for.
That's true.
So I feel like there's going to be like 100,000 people in California that have signed up for this, and they're going to get their dish, and they're going to sign, and their internet's going to be crappy, and they're going to complain and be like, "What the hell's going on?"
Yeah, so, like people who like put $100 deposit on a Cybertruck or anything that Musk comes out with, they just like, I'll sign up for that. Oh, newsletter, yep.
So it's like if there's some poor farmer in the middle of like Australia that hasn't. There's not another person within 100 kilometers of him, then that's like the person that could really benefit from something like this. But probably not if you're living in the middle of Sydney or Melbourne or something like that.
Right. Interesting.
But anyway, so that's a bit of an update for SpaceX. But in all honesty, I'm really interested by SpaceX. And I like how, Elon Musk, he sees this traditional business model of space flight and launching satellites, and he's like, well, this isn't good enough. And then he just invents, he uses the advantage that they have. They have the launch capability. That's really what SpaceX has. They can launch things. They're like, how can we make new businesses that other people can't because we have launch capability? And it's like, we can make a massive satellite internet business because we can just launch. They launch like 150 satellites at a time or something crazy. So they just launch them up. And they can even piggyback it. They can piggyback the Starlink satellite launches on launches of other satellites from paying customers. So it's pretty cool. Anyway, I like the whole business idea.
Yeah, absolutely.
All right, that's about all I got to talk about for SpaceX. You gonna keep the space flight stuff rolling?
Yeah, let's go. What else we've got?
Guess what? Bezos. SpaceX's big competitor, Blue Origin. They are sending people to space now, apparently.
Whoa. Okay.
So Jeff Bezos' space venture Blue Origin will launch its first astronaut crew to space on July 20th. Flying on its space tourism rocket called New Shepard, the company announced on Wednesday. Blue Origin has yet to open ticket sales or release pricing information about New Shepard flights, but will host a public auction for a seat on the first crewed launch. Blah, 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 blah. A sealed online auction will run May 19th, and bids can go up to $50,000, with the company requiring additional identification information and a $10,000 deposit for higher bids. So there you go. The interesting thing is that I'm just trying to find it here in the article. Yeah, the company has yet to fly New Shepard with passengers on board.
Oh God!
Blue Origin has test flown the rocket with and capsule more than a dozen times to date without crew, including a test flight last month at the company's facility in Texas. But they've never flown it with anybody on board or done any sort of testing in that. It's just like, right, we're gonna commercialize this sucker on July the 20th. Let's go.
How would you feel if I was like, oh, by the way, I built a car, and I've driven it around the block like a dozen times. Do you want to hop in and go for a long journey?
Yeah, I've never driven it to Sydney. I've never driven it on a highway, but I drove it around the block and it worked.
And I just started building these things like pretty recently.
Yeah. But it's not even like that. It's like saying, yeah, I built this thing. I drove around the block. Do you want to take it on a road trip? I'm not coming with you. I'm staying here. There's no way I'm getting in that thing. But do you want to take it? And by the way, pay me $50,000 too.
Yeah. Oh dear. Has SpaceX sent any of their rockets with people yet? Is that something they do?
Oh yeah.
Okay.
Yeah. So their Dragon capsule got certified ages ago.
Right.
So it's been taking like the last. So there was what they call a test mission. So they do these unmanned flights and they have all the sensors, and the Dragon capsule went all the way up to the International Space Station, and then the crewed Dragon capsule went to the International Space Station, came back down. They did heaps of testing. All was good. Then they did a test flight with 2 people in it, and they flew it up to the space station and back down, and that was all good. And then once then they had all the ticks needed from NASA and the whatever the safety regulators, whatever they are. And now they do, I think, 4-person flights, four people in the crew up to the space station. And they just brought back 4 people from the space station.
Wow.
So yeah,
that's terrifying.
So yeah. It is pretty crazy, isn't it?
I don't like it at all.
It's pretty crazy.
I mean, the first.
I'd be sweating bullets.
Yeah. What did Buffett say about the airspace industry? How the first 50 years were probably the worst 50 years for that industry, based on just whenever there's a new industry
safety stuff.
Yeah, I mean, they're all figuring out safety stuff, and the only way to figure it out is to make mistakes in a lot of cases, because you can try and prevent some things from happening, but there's always going to be things you don't foresee. And it's kind of scary.
Yep. I mean, like, credit to the astronauts. Like they've signed up for something I would never sign up for.
Very brave. Yeah. It's wouldn't be my cup of tea. No.
They got to be a little bit nuts, don't they?
Yeah.
Or they just have a lot of faith in. I mean, to be fair, there's always a risk. I mean, they're flying giant rockets up to, into outer space kind of thing.
Yeah.
So there's always a risk. But, I mean, it's not like they don't have any testing. So, and, I mean, they've got, like, the rockets have launch escape systems. So if the rocket is going to blow up, then the actual capsule on the top of it can jet away from the explosion and can land safely. So there are redundancies and that sort of thing.
Yeah,
so.
They've learned a few things over the years.
They've learned a few things, yeah. Well, they've certainly had space flights had enough failed tests over the years to to learn. Anyway, there we go. Lots to talk about in the space industry. Do you want to move on to some Q&A? We'll probably wrap things up in about 10 minutes or so.
Yeah, for sure. What question do you want? Do you want me to ask you one?
Sure. What about this top one here?
This one?
Yeah, why not?
Okay.
Let's give that one a crack.
All right. Regardless of price, management, and everything and anything else, what is the single best moat you have seen a business have? Oh, we kind of spoke a little bit about.
We did actually.
One that
we did.
We could probably use as an example here. Yeah.
There are lots of different types of moats. And to be honest, I don't know which one is the most powerful. They're all pretty damn powerful. For example, you can have a brand moat, which you can argue like companies like Tesla do. The ones with like the cult followings, the Apples, the Teslas of the world. Coca-Cola has a brand moat, that sort of stuff. Then there's, switching moats where the company provides a product or a service that's just so good or is so integral to, somebody's workflow that they just can't switch away from it. Think of like, I don't know, an Adobe or, some sort of software company. There's toll moats where you've got no other option. You need to get over that bridge and there's only one bridge. You got to pay the toll. There's a networking effect where as the network grows, the product or service continues to get better. The experience gets better the more people that use it. So naturally, more and more people use it, and it gets better, and it beats competitors. What other types of moats are there?
I mean, this is kind of a toll mode in a way, but businesses that have kind of a geographical advantage. So businesses where they already have track laid out for transporting freight, and it's just not in any sense for a business to lay down a track right next to them and to compete. That doesn't make any sense, because both businesses would then just lose. They would just both make no money, because they would just be underpricing each other. So having a physical kind of land advantage like that, a good example of
barrier to entry.
Yeah, barrier to entry.
Barrier to entry mode, where it's just too hard or not worth it for another business to get into something you're already doing. Yeah,
a good example of this, which doesn't really, it doesn't apply at all today, but Buffett in his early years would buy up, when he was buying whole businesses and he was a bit smaller, he would buy the largest newspaper in each town. And what he figured out was that eventually each town only had one newspaper, and it was always the leading newspaper that eventually got the entire market, because people didn't want to buy two newspapers. They just wanted to buy one. So he figured out you could just buy the leading newspaper in the town, and eventually it would become a monopoly in that town. And that's what happened. And he did that to a few different towns across the US. So that doesn't apply anymore, obviously, but that's an example of an advantage where if you just have the lead in that industry, everyone's going to go to you. And I think, Facebook kind of has that in a way. It's kind of like a networking effect, I guess, in that people don't want to have many different ways that they can communicate with people. They want to have one place where they can access everybody.
Yeah. What one would be the strongest? I think I probably think something like a switching moat is probably the strongest and safest. The only reason I say that, brand moats are powerful, no doubt, but the in trend kind of brands can change over time. Apple's hot right now, but and it has been for a long time, but in 30 years, it may not be the company that everybody goes to. Tesla may not be the luxury car brand that, electric cars that everybody wants, kind of thing.
Yeah.
But having said that, brand moats can still be very, very powerful at the time, because obviously the biggest companies in the world right now, you can argue that they're mostly driven by brand moats. But I probably think a switching moat, something where, it's just so integral that you can't switch away from it.
Yeah.
That's a pretty powerful moat.
Yeah. Branding is definitely on the weaker side of moats, particularly for consumer goods, because people's opinions change so quickly. Even something like Nike, for example, in apparel, they're obviously the leading athletic apparel company at the moment. You go back 30 years, and before the NBA really blew up Nike in the late 80s and early 90s, I think Nike was a tiny company. So I know that's a very long period of time, 20 years, but even over that period, we're probably going to see Nike go away and something else rise up. And the same is true for restaurants, for example, that are popular, or drinks that people buy. And then there's usually one brand that sustains itself over an extremely long period of time, like a Coke or a McDonald's or something like that.
But even with brand moats, the idea of modern day cancel culture means it could, your brand moat could be dissolved very quickly if you just make one wrong move. The idea is that with a switching moat, if you make a couple of wrong moves as a business, there's still nothing that those other people are going to do about it, because, sure, you could move away from this system, but that's going to cost us time and money. So even though you've made a couple of mistakes and your brand isn't really shone, you're not shining with the same light that you did, your reputation's been damaged or something like that, then it's but it's still so hard to get away from you,
Yeah.
But anyway,
I'm fascinated by brands and how they change over time, because a lot of brands as well, people buy into them because they feel like they're getting something exclusive, and then eventually that brand will get to a size where it doesn't have that appeal anymore, and then people are looking for something more obscure that is
more luxury.
Yeah, exactly. So
I've got this and you don't.
Exactly. So things can change rapidly in that space, but I think switching. I think what you said, switching or some kind of barrier to entry or a toll moat. Those are probably the strongest.
Yeah. All right, I'll ask this one because it's actually asked to you. Oh. Hi, Hamish. I watched your video on stock analysis, and I noticed that you don't read the proxy statement of the companies you're interested in, and I don't understand why, as it gives you large insight into corporate governance within the company. Why do you do this?
Yeah, I mean,
I'm sure you do. You probably look into proxy statements, don't you?
Yeah, I do. I'm not sure which video that is specifically, but yeah, I mean, I've said this a couple of different times, I think, as well. Whenever I do a stock analysis on a company, which I haven't done one on my channel in a long time, but it's impossible to squeeze everything that I do or everything that I research into a 10-minute video. Even the 60-minute presentations that I do for my students, where I go quite in depth, I still in those presentations am finding that I don't talk about every part of the company that I research because it's just impossible. But you're correct. The proxy statement for US companies is an integral part of your research, I think, in terms of figuring out whether management's values are aligned with yours. And whether, because the proxy form, for those who are not aware, basically outlines management's compensation. So how they're getting paid,
cash.
what form, what are the drivers that influence how much they get paid, like EPS or revenue, and then also how much stock the directors own. Those two things are critical for your analysis. So I do, and it is important.
Yeah, no, absolutely. I thought something was up. I was like, wait, you don't look at the proxy statement?
I hate the proxy statement. I purposefully...
just toss it out.
Yeah.
Pick it up, throw it in the bin.
Yeah.
Don't even look at it.
Yeah.
Doesn't tell you anything.
Print it out and then just rip it up.
Yeah. But no, you're absolutely right. Proxy statement is very important. I mean, you want to... Probably one of the biggest things that can turn a company bad quickly is the management team.
Oh, yeah.
A self-centered manager, like a CEO that just cares about themselves. And the proxy statement is where you're going to learn if their compensation is structured so that the CEO can act in that kind of selfish way where they don't care about long-term shareholders or not.
Yeah.
It's like if they're just getting fat salaries and fat bonuses and they don't have a lot invested in the business, they don't have a lot of stock, they don't have any incentive to assist the long-term shareholders, then yeah, it's very easy for that manager to just be like, you know what, I'm getting paid squillions and it doesn't matter what happens to the stock price, it doesn't matter what happens to the business metrics, I'm sitting pretty here, I don't care about you fools, I just care about myself.
Yeah, pretty much.
Yeah, so it is very important. Definitely falls under the management. So we talk about understanding the business, moats, management, and then valuation. It definitely falls under that management part of analysis. It's very important.
Exactly.
Very important. Alrighty. Should we wrap things up?
Yeah, let's wrap things up for today. Thanks everyone for tuning in, as always. Thanks everyone for asking lots and lots of questions. We've got a lot here. I'm just scrolling through. My goodness, we're never going to get through this.
It's just a backlog, isn't it?
What do we do? We ask for questions too much. Stop sending questions. No, I'm just kidding.
No,
keep sending them in. Keep sending your questions in. And if you're wondering how you can ask a question, you can head over to the YouTube version of the podcast at youtube.com// The Young Investors Podcast and just click on the latest episode and leave your questions as a comment on the latest video. We always enjoy questions coming through. I'm sure we'll get through all of these questions over the next couple of episodes.
Yeah,
maybe we'll have to do might have to do another Q&A special that we used to do.
Yeah.
To get through.
We could do one of those.
To get through
That'd
a bunch
be handy.
Of these. Yeah.
Yeah.
Anyway.
Clear the slate. Yeah. So yeah, if you got a question, definitely go and ask on the YouTube version.
Absolutely.
But yeah.
Thanks, everyone.
Thanks, guys, for...
Go ahead.
Sorry, I'm taking over. I'm taking over the
How
outro.
dare you.
Sit down. I've got this now, boys. So thanks, everyone, for listening, and bye. Genuinely, thanks. As we always say, thanks very much, everybody, for listening in. Hope you enjoyed this episode. Thanks to Sharesight for sponsoring, and we will be back, of course, next week. So we'll see you guys then.
See you guys.